Yo guys, welcome to my YouTube channel. My name's Luke Needham and I'm on a journey to create financial freedom and financial independence through Forex trading and entrepreneurship. So, welcome back to my channel if you've been here before. I'm here today making a video about what is an edge in Forex trading, what an edge in Forex trading means, what it consists of, and how you could potentially cultivate an edge. But just before that, a quick channel update. So what I'm going to be doing with the channel is I'm going to be doing initially some of these educational videos, just getting some terms out there, just explaining a few things about Forex before I really get deeper into my journey. And I'm also going to be doing some trade recap videos, just recapping over some trades which I've done recently. So if you're newer to Forex, the trade recap videos maybe won't make too much sense. Because I'm not going to go super in depth on the strategy, but if you've been in Forex for a while, then you might be interested in my trade recap. So that's why I'm doing the trade recap videos. But I'm primarily going to be focusing on videos like this, explaining different things about Forex, about different aspects to trading in Forex and being a Forex trader. And as time goes on, I will let you guys know more about me, more about my journey with Forex, and more about where I am now and how I progress in the future with Forex. So thanks for listening guys, let's get on with the video. What is an edge in Forex? So an edge in the Forex market is the difference between the winners and the losers. Some traders have an edge, and in their trading behaviours, in their trading system, they have an edge which allows them to extract money from the Forex market. The rest of the traders who aren't extracting money from the Forex market don't have an edge, and it's as simple as that. So having an edge in the Forex market refers to having a positive expectancy for each trade that you take. So basically, when you take a trade, the average outcome of that trade is going to be above zero or profitable. Now, this doesn't mean that you win every trade. You could lose a lot of trades. You could even lose more than half of the trades. But what it does mean is that over a sample of data, so let's say over 100 trades, your winners will pay for your losers. So let's say that on average, you took 100 trades, 25 of them won 5 to 1, so you win 25 times 5, and then 75 of them lost, so you lose 75 times 1. So that would result in 50R gained as a result of those 100 trades. So your expectancy for each trade, considering the whole sample of data, would be 0.5R per trade. So to recap, an edge is just a positive expectancy per trade, which means that over a given sample of data, you would expect that your winners will more than pay for your losers. So on average, over your trading sample, you will end up in a profit by the end of it. So the way that I see it, there's two aspects to cultivating and maintaining an edge in the Forex market. The first aspect is getting a profitable strategy. So whether you create a strategy yourself or learn a strategy, you have to get a profitable strategy, a strategy which produces an edge all the time when it's put into practice correctly. The second aspect of cultivating or maintaining an edge in the Forex market is the psychological aspect. It's all well and good having a strategy that's got a profitable expectancy, but if you can't put that strategy into practice, then it's pointless. So you're going to need to have the psychological skill set and the right mindset to deploy that strategy effectively. So the first aspect, as I mentioned, of having an edge in the market is having a strategy which has got a positive expectancy. So before you can really consider even though the psychological aspect is important to think about from the beginning, before you can really implement any of your psychological skills, you need to have a strategy that has a positive expectancy. So in terms of what I mean by a strategy, it's effectively a system which will define opportunities in the market in a specific way. It will define your entry points, your exit points, and which opportunities are valid for you to take. So the strategy can come in many forms, and There's a lot of different types of strategies, but which one you choose is really up to you, and you really have to do your own research to find a good strategy with a positive expectancy and then put in the effort to learn that strategy. So, in terms of having a strategy that's got a positive expectancy, what this basically comes down to is, I'd say, three things. Firstly, you really need to keep your risk consistent with every trade, because if you don't keep your risk consistent with each trade, this could seriously skew the data and it can skew your expectancy. Secondly, there's a win rate of a strategy. So, how often do you actually win using that strategy? Now, how often this needs to be, it really depends on the risk to reward ratio of the strategy. So you could have an edge with a strategy that only wins 15% of the time, or you could have an edge with a strategy that wins 80% of the time. It all depends on how much you win relative to your risk when you do win. So that brings me on to the third aspect of a winning strategy, and that is the average win size. So all this is basically how much you win on average when you win a trade. So if you look at all your winners from a 100 trade sample, if you add up how much you won relative to your risk in those trades and then divided it by how many times you won, that will give you your average win size. So how much you need to win to have a positive expectancy with a strategy is really relative to how much you win when you do win. So to describe this further, I'm just going to take you over to my PC screen so that I can show you a table of risk to reward against win rate to see how much you'd have to win with different risk to reward ratios. Yo guys, so I'm just over on my PC screen now, and I just thought I'd bring you over to this document that I've made so that you guys can get a more visual representation of what I've been talking about. And I will link this document in my description so you can download it if you're interested in getting this table yourself. So just to recap a couple of things, the expectancy is the average outcome of taking the trade, which is calculated by the average R1 times the percentage that you win minus the average R lost times the percentage that you lost. Hopefully the average R lost is 1, so that'll just be 1 times the percentage you lose, and your average R1 and your win percentage is the two things that you can manipulate to generate a positive expectancy. So like I said, the average win size calculated by the total R1 and then the number of winning trades. So here I've just calculated for you guys the different win rates that you'd need to have in order to break even relative to the average win size. So you can see here that if you win 1R every time you win, then to break even you're going to need to win 50% of the time. So you're really going to have to win like more than half the time to make a profit if you're only gaining 1R when you do win. So with 2R, if you win 2R when you win, it's 33%. If you win 3R when you win, then the break even is 25%. And if you win 5R when you win, then the break even's 16.7%. And I have rounded these figures up to 2 decimal places. So as you can see, the more that you win on average when you do win, the less often that you actually have to win to be a profitable trader. So that's why for me, I really favour a higher risk to reward strategy. In my personal trading plan, the minimum risk to reward that I'm happy to accept in some circumstances is 5 to 1. But generally, I actually look for a 10 to 1 or greater risk to reward in my trading opportunities. This basically ensures that I don't have to win that often. Like, if you've got a 10 to 1, you only have to win 9.1% of the time to break even. So, if you're winning even 15% of the time, then you're going to have a very nice expectancy. If you can get that win rate with 10 to 1 up to 30%, 40%, then your expectancy is going to be really, really spectacular. And like I mentioned, I think I mentioned it earlier in this video, but some of the trades I've had recently have been over 20 to 1. And over 20 to 1, you only need to be winning less than 5% of the time to actually be a break-even trader. So if your strategy gives you that capability to potentially get over a 20 to 1 trade, then you really don't have to win often at all. So for me,
I really favour strategies that provide a higher risk to reward. Now, that's not to say that a lower risk to reward strategy is an issue, especially if you're on the higher time frames and you're a really good analyst. You might be able to achieve a really high win rate. So a lower risk to reward is absolutely fine as long as you're generating a win rate which is greater than the win rate that's necessary to break even. So yeah, basically the point of this is that having a higher average win size means that you don't have to win as often to be a profitable trader. So it's really a personal choice and it's up to you, and it depends on what strategy you've got, what type of average win size that you want to aim for. But just keep in mind that the lower you go with your average win size, the more frequently you need to be right, and vice versa. So just keep that in mind, guys. I will link this table and this document in the description. So if you guys want to keep this document, then you're welcome to do so. Thanks a lot, guys. So I'll move on to the next section now.
Okay, guys, so I hope you enjoyed that section about actually having a strategic edge in the Forex market from a strategy perspective. Now, I want to talk about the second part of having an edge in the Forex market, which I believe is another key component if you actually want to take money out of the Forex market. Alright, so the second aspect of having an edge in the Forex market is the psychological aspect. So, to keep it simple, you need to have the right mindset and the right psychology in place so that you can actually deploy your positive expectancy strategy correctly in the market. So, psychology is something which, when you first start with trading, you might sort of skim over and not really realize how important this aspect of having an edge in the market actually is. Like, it's all right having a strategy that's got a positive expectancy, and your strategy could be the best strategy in the world, but if you don't have your psychology correct and the right mindset in place to not engage in self-sabotaging behaviors, then honestly you won't be able to put your strategy into practice, and regardless of how good it is, it won't mean anything. So in terms of having a psychological edge, I really think it comes down to a couple of key things. So the first thing you need is a clear trading plan, which is a plan of how you're going to actually trade your system in real time and how you're going to do this in a risk safe way. So it basically means that you've got a plan for how you're going to identify opportunities to trade, a plan for how you're going to enter into those opportunities, a plan for how much risk you can take and how much risk you will take on each trade, and also a plan for managing the positions once you've actually opened them positions to capitalize on the opportunities that your plan allows you to capitalize on. Now, the other aspect of this is following the plan. It's absolutely essential to follow your plan. If you don't follow the plan, then there's no point even having a plan. And if you can't follow your plan, then you will not be able to put your system into practice consistently. So having a psychological edge in Forex, it really comes down to creating the right beliefs and attitudes inside yourself which allow you to follow your plan, and having a plan which allows you to effectively put your strategy into practice in the market. So guys, if you've got a system and you've not got a plan, then I would definitely encourage you to create a trading plan so you can actually trade that system. Or if you're struggling to trade your plan as you planned it, then I'd encourage you to do some type of journaling practice and really identify what type of thoughts and feelings are actually coming up when you're struggling to trade your plan. So if you take a trade which doesn't fit into your plan, you really need to identify why you've done that and what's triggered it, and you need to work to be able to not make the same mistake again. When you come into trading, very few people have the correct attitudes and beliefs to immediately start making money, and honestly the psychological aspect is probably harder than the strategic aspect when it comes to actually becoming a profitable trader. So don't worry if you have struggled following your plan in the past, or if you're still struggling to follow it, but what is really essential is that you need to be taking action steps to prevent yourself from not following the plan in future. So if you're struggling following your plan, or you're struggling with your psychology, I'd recommend doing some type of journaling practice and really journaling what is actually going on in your mind before taking the trades, and how do you feel after taking the trades? So I'll link a couple of good resources in the description about trading psychology, because if it's something that you're struggling with, it's probably not something that I'm going to be able to fix for you right now. And I would recommend that you do your journaling practices, and then you can work out what's gone wrong and make an action plan of how you can prevent those same mistakes happening in the future. But yeah, I'll recommend some resources in the description of other YouTube channels and other videos that you can go and watch to learn more about trading psychology and maybe gain better insight into how to improve your trading psychology. So I will recommend as well the book by Mark Douglas, Trading in the Zone. That book pretty much lays out everything there is to know about trading psychology. It's a fantastic book, and you'll probably hear a lot of traders recommending it, and that's for a good reason, because it really is an excellent book that really explains trading psychology. So I hope you guys have enjoyed this section of the video. Trading psychology is honestly one of the most important things when it comes to becoming a profitable trader, and you really need to work on it if you're struggling with it. So just to recap the video, there's two key parts to having an edge in the Forex market. It's one, a strategy with a positive expectancy, and two, the right psychology to put that strategy into practice, which entails having a clear plan of how you'll trade the strategy and following that plan effectively in real time. So now I'm going to lay out my approach to how I've cultivated an edge in the Forex market and how I'll maintain that edge going forwards. So this is simply going to be what I've done up to this point in terms of getting an edge, and then now how I'm actually trading and how I'm actually managing my psychology to prevent any self-sabotaging and to be able to put the strategy that I learned into practice effectively. So for me, since I started Forex, I've studied quite a few strategies and I've tried to come up with a few on my own. And the one that I'm using currently is the best one I found in that time. And it's a strategy based on smart money concepts, which I actually learned from a company called Vertex Investing. And I'll also link them in the description. And that's a strategy that I'm now using. So in terms of actually learning this strategy, for me, I've got the mentorship from Vertex, and that's how I've learned the strategy, through their courses and through the mentorship that they provide. For me, that was a really valuable investment in myself to learn new information and learn a strategy. But it's not just the learning aspect of the strategy. I've then been backtesting the strategy for several months and really getting to grips with how the strategy actually works and how to put it into practice. Now, more recently, I have started trading on a small account, putting my strategy into practice. And the reason why I can do that is because I did the learning and did the backtesting. So now I have the confidence to identify and take those trades. Now, what I do have is a very, very clear plan about how to trade the strategy. And like I mentioned before, this plan, it's got opportunity identification, entry criteria, it's got risk management, it's got trade management, the times of day that I can trade, the days of the week that I'll trade. It's got everything related to putting my strategy into practice in real time in the market. So my approach to a market is I come to the market in the morning or whenever I've got time, and if it fits in with my trading times, can look for valid opportunities in the market, and I will just follow my plan. And as long as I'm following my plan, I know that eventually I will make money from the market. And that's my approach to maintaining an edge. So for me, the reason why I like this strategy compared with other strategies is that it offers the potential for a very high reward to risk ratio. So that means that you don't necessarily have to have a super high win rate in order to actually make a profit. So for example, some of the trades I've had recently, I've had a trade that was 12 to 1. I've had a trade that was 26 to 1. I've had some trades with smaller risk to reward, 3 to 1, 4 to 1. But the fact that it has that potential to generate those higher risk reward strategies basically means that I don't need to have as high of a win rate, which I'm sure, as you've seen in the previous section about the strategic edge, you can see that having a high risk to reward ratio with your strategy is very advantageous, because it takes that pressure off of actually having to have a high win rate and having to win on it really frequently. So it works for me because it means that I don't hesitate taking positions. I don't struggle with hesitation or worrying that the trade's going to lose, because I know that even if the trade does lose, as long as it clearly fits my plan, at some point one of them trades is going to win, and it's going to win for a lot. So since I trade a high risk to reward strategy, when I do win, it will pay, or more than pay, for the losses that I've taken recently. So what I like about this approach is that you're not under that immense pressure to win all the time. So it takes the pressure off of having to win super frequently. And especially earlier in your trading career, in the learning stage, you are going to take some losses. So, don't expect that you're not going to be taking losses. And I still take a lot of losses, honestly. But the fact that I'm trading such a high risk to reward strategy is allowing me to actually make more money than I'm losing. Because when I do win, it's substantially larger than when I lose. Now, from a psychology point of view, it's something that in the past I have struggled with a bit more, but I really feel like at this point I've got my psychology to a point where I can follow the plan without any issues, because for me, not following the plan has only ever resulted in making losses, making errors, and when I do follow the plan, I tend to make profits. So the reason why I can follow the plan is because I've changed my beliefs and attitudes towards following the plan, so that I truly now believe that following the plan is the only way that I can make money in the Forex market, and it's also the best way for me to make money, and it's also the least stressful thing that I can do with regard to my trading, is to follow my plan effectively. So to summarise, my approach to cultivating and maintaining an edge in the Forex market is I have a high risk to reward strategy, which I've learned from a mentor. I've backtested that strategy. I've created a plan of how to trade that strategy in real time, and I follow that plan because my mindset allows me to follow that plan effectively. So if you guys have got any questions about my approach to having an edge, creating an edge and maintaining an edge in the market, then just leave them in the comments and I'll try and get back to you guys. I will read every comment, so if you have got any questions, then just drop them in the comments below. Alright guys, so thanks for watching this video. So just to summarise the video, an edge in the Forex market is basically what is the difference between winners and losers. Winners have an edge and losers don't have an edge. So if you want to be a winner in the Forex market, then you're going to need to have an edge. So there's two aspects to the edge. There's having the positive expectancy strategy, which is just a winning trading system. And then there's a psychological aspect of having a plan and following that plan, which really allows you to actually put that positive expectancy system into practice with your trading. So when it comes to having a positive expectancy system, you can basically learn one of them from a mentor, or you can try and create one yourself, but that might take a little bit longer. And you can prove that it's a positive expectancy system through backtesting, forward testing, doing demo account, or through actually live trading using that system in real time. Now, obviously you're never going to know for certain if it's got a positive expectancy in the future, because you're only going to know what happened in the past with regard to your testing of that. But generally, if you can prove that over a decent sample of data, either in backtesting or forward testing, that the system produces an edge, then I'd say that there's a high probability that it does actually have an edge, and that it will produce an edge in future if you continue to trade it. And the final aspect is being able to put that proven strategy into practice. So you really need to have that plan in place, and you need to be consistent with your behaviours and with following that plan in order to actually maintain your edge in the market. So thanks for watching guys, and I hope you really enjoyed this video and maybe found something educational or informative in the video with regards to actually how to get an edge in the market, what an edge is, and how to maintain an edge in the market. So if you have got any questions, then just drop them in the comments or send me a message. And if you're enjoying my content or you're interested in my future content, then please subscribe to the channel. And if you want to get notified when I make a new video, then hit the bell icon. So as always guys, the Forex market is very risky, so please don't take part in it unless you have a proper education and a proper plan of how to trade. And if you haven't got a proven winning system, then I'd recommend not taking part in the market until you do, because you will almost certainly lose your money. So thanks very much for watching guys, and I hope you guys have a good day. Thanks a lot.